Real estate, yeah. Yeah, the housing market looks like it's about to roll over, right? But I think it's just things are going to get a lot better. Like the bottom is in sight. Um,
Mm-hmm.
the demand side of
And
this, yeah, go ahead.
you've talked about it before. Is this bottom still a part of your normalization, that this is the market normalizing itself?
Yeah, I mean
Or are we going below that?
prices are still very elevated, and home buying activity is still within normal ranges. It's at the lower end of normal ranges, but
Mm-hmm.
it's still within normal ranges. This is nothing like '08 right now, and it's never going to
Mm-hmm.
get like that because the
Mm-hmm.
demand. Well, first off, the quality of loan originations is so much higher. '08 happened for two reasons: massive oversupply and
Mm-hmm.
very, very, very poor loan quality. We have
Mm-hmm.
neither of those today. We have massive undersupply and very high loan quality. So it's not a repeat of '08. Meanwhile, the X
Mm-hmm.
factor here is demand. There are so many
Mm-hmm.
people out there, my age range, 22 to 42, that do not own homes, that want to own
Mm-hmm.
homes. They are sitting on the sidelines. They are waiting for any weakness in the market to jump in. They are waiting for any weakness in mortgage rates to jump in. They are there. They are ready to buy.
Mm-hmm.
We didn't have that in '06. There was nobody, there wasn't a huge mass of people sitting on the sidelines because everybody owned homes. We
Mm-hmm.
built so many homes from 2000 to 2006 and handed out all these crappy loans that
Mm-hmm.
everybody and their best friend owned a home, even if you had no business owning a home. But today, we have a lot of people that are very well capitalized with a lot of cash, a lot of buying power, and great jobs that are sitting on the
Mm-hmm.
sidelines, deserve to own a home, and just waiting to get their chance. So
Mm-hmm.
we're seeing that in some of the new home sales numbers. New home sales, as soon as the new home adjusted sales prices fell, boom, the
Mm-hmm.
next month, new home sales volume surged. That's a sign of a lot of pent up demand on the sidelines. So I think there is a bottom in sight for the housing market because I think one, there's a lot of demand on the sidelines. Two, we're still in a very undersupplied market.
Mm-hmm.
Three, the Fed is likely to make pivot in the next 3 months, and therefore I think mortgage rates are pretty close to maxing out, and they can come down substantially in 2023. So I think that while home prices will drop over the next 2 to 3, 4, 5, 6 months, and
Mm-hmm.
while home sales activity will slow over the next 2, 3, 4 to 5, 6 months, I think that come second quarter 23, third quarter 23, fourth quarter 23, and into 2024, the home market, the housing market is going to be very strong again. Because I think mortgage rates are going to go lower. This demand is going to come in from the sidelines, and the undersupply situation is going to remain an undersupply situation for quite a bit longer. So I think that the housing market is going to be actually quite strong within 12 months and then grow very healthily in a 12-month to 24, 36-month window. So a bottom is in sight. And again, real estate stocks, housing stocks, like other stocks, they price things in
Mm-hmm.
before they happen. Those stocks have been crushed this year, and they fell significantly before the housing market started to roll over. So they're going to rebound
Mm-hmm.
significantly before the housing market starts to really stage a comeback. And so if investors start to see a comeback for the housing market materializing in mid 2023, you could start to see housing stocks start to shape up here in late
Mm-hmm.
2022 and early 2023. That's why I'm getting pretty bullish on real estate stocks. And I look at the valuations across a lot of those names, whether it's home builders, whether it's iBuyers, whether it's digital real estate brokerages. You're starting to see a lot of really cheap stocks in that market. And so this is probably the time. Be greedy when others are fearful. This is a good time to get greedy on those stocks. And actually, on that note, it reminds me one thing I forgot to mention earlier is so there's a digital real estate brokerage out there. They're called Compass, and Compass is publicly traded, and they went public through a SPAC, and it's been a disaster, and it's dropped significantly. But last week, I believe it was, rumors broke that a major PE firm, private equity firm, is thinking about taking Compass private, coming in
Mm-hmm.
and buying the company and taking him private. That
Mm-hmm.
one indicates they believe Compass stock is significantly undervalued. But two,
Mm-hmm.
we ran the numbers on this. Following M&A activity, mergers and acquisitions activity, is very important at this point in time because deal count, M&A deal count, tends to
Mm-hmm.
coincide with the bottom of market. So when PE firms and companies, and when we're not merging, we're not acquiring, we're not deal making, that's bad. When these companies start to return to their deal making ways, it means they start to think the bottom is in place, and they tend to be right. The stock market bottom after the dot-com crash coincided with a bottom in M&A deal count. The stock market bottom after the great financial crash coincided with a bottom in M&A deal count. The COVID crash 2020, that bottom in the market coincided with a bottom in M&A deal count. We've seen M&A deal count decline all year long. But in the fourth quarter of 2022, it's off to a red hot start. Red hot start.
Okay.
And if it keeps up its pace, I wrote the numbers down a couple days ago when I was going through this. So this is old data. This is from October 5th. So the numbers have probably changed a little bit. But back on October 5th, there had been around 900 M&A deals executed in the first 5 days of October. So that's about 180 deals a day. There's 92 days in the fourth quarter. So that implies that the fourth quarter pace, M&A volume, it's on pace to do 16,560 deals in that quarter, which would be above the third quarter total. The first quarter over quarter increase in M&A deal count during this bear market. The first quarter over quarter increase in M&A deal count in the bear market of 2020 marked the end of that bear market. The first quarter over quarter increase in M&A deal count in the 2008-2009 bear market marked the bottom of that bear market. The first quarter over quarter increase in M&A deal count in the 2000, 2001, 2002, 2003 bear market marked the end of that bear market. If this deal-making pace continues, then one can reasonably state that this is yet another data point confirming that the stock market should bottom this quarter. And if it does, then M&A deal count will significantly increase over the next few months and weeks. But, Naver just took out Poshmark. So that was a big deal that also happened. Ginkgo Bioworks has executed a few deals recently. So there's just been a lot of deal making, and it's increasing quite significantly. So we're watching that very closely, but it's also another data point that makes us pretty bullish. The stock market bottom is fairly close.
Thanks for watching HGI Clips. For the full episode, head on over to our sister channel at Hypergrowth Investing by clicking the link in the description, or listen to the podcast on any of your favorite streaming platforms. We make new episodes every Wednesday, so make sure to check it out and subscribe to never miss any of Luke's Hypergrowth insights.